Bitcoin price forecast. BTC soars to a new all-time of 75,417 as Trump wins U.S. presidential election. Euro-US dollar extends fall, poised for biggest daily decline since 2016. Euro-US dollar price forecast. U.S. dollar soars on Trump's victory. Bay Street looks headed for positive start.
Mexican peso depreciates as Trump elected U.S. president. Forex Live European FX News Wrap. Dollar soars as Trump wins U.S. presidential election. Commodity prices fall after Donald Trump elected U.S. president.
Fact Box. What links have Trump and his allies maintained with oil-rich Gulf states?
Kiwi dollar, U.S. dollar trends lower after Trump victory and weekend Z employment data.
Spanish services sector expands for 14th month PMI survey.
Good morning. We'll start in about 7.5 minutes, maybe 8, maybe 7. Notice all these headlines came out in the last 17 minutes. Very active news flow, huh? Hour and 37 minutes to ECB speech. 2 hours and 7 minutes to Canadian PMI. Look at that. Gold down 1.37. Euro dollar down 2.22, Bubba. Yens are on a tear, but that's what we had set up. Don't worry, Abdul. I'm going to give this away for free. We've been developing it for months. It's cost me a very pretty penny. I've already paid more than I expected. But eventually, when it's ready, I'll give it to everybody for free. We're just working on this massive upgrade. They say they've got it finally launched, but I have my doubts. So, it's not quite ready. Probably next week, though. Right? One more upgrade, one more tweak to make this nearly perfect. All right, we'll start in about 4.25 minutes. Maybe as fast as 3.82 minutes. $3.82. Actually, I'm a little low on coffee. I'll get one more and then we'll go.
Gold tumbles to back below $2,700 after Trump elected president.
Goldman Sachs lowers Euro area 2025 GDP growth forecast to 0% from 1% previously. Hey, did I say something while I was gone? Goldman Sachs lowers Euro area GDP growth. Down from 1.1 to 0.8. Oh, thank you, Wayne. You're welcome, Wayne. Anybody jealous that I have a clone. Now if I can get it to wash my car, huh? All right, well, it says 8:00:00 on my microwave clock. It's time to get going. Let me turn this beautiful music off if I can find it. Oh, see, don't touch that. If I can find it. Where's it coming from? Oh, I found it. I found it. There we go. So good morning. Welcome to Forex.Today, the YouTube community.
Trump victory evokes mixed response in world markets.
Of more than 21,000 foreign exchange traders, we gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, hello, how are ya? How's your mum? We're looking at the Squawk Box. Don't worry about that. That's going to be free to the public very soon. We've been working on it for months. It's not quite ready. And then we have stuff like this now. You're like, wait, what? You have AI that reads the news and then quantifies it? Yeah, but don't worry about that. Shh. Yes, we have AI that reads the news. You're like, how does that fit with the model? Well, imagine now we have live real-time news feed that pulls all the headlines, and we have AI voices. Literally, we had to buy these voices and train them to read the news to you like a Squawk Box. And then we have real-time calendar, and we have real-time pattern recognition. Services like this can cost anywhere between $100 a month and $400 a month. I'm going to give it away for free. But if we're going to read the headlines, we might as well actually read the news and say, oh, some news is coming from different sources. Really? Yeah. Like Chevron is very bullish right now. Here are all the articles, all the news sources. Right? So we read 43 different articles from 18 sources about Chevron, and it's quite positive right now. Oh my God. Very positive, and has grown quite positive just recently. Okay. And yeah, so that's what we do. Whoa. Shut the back door. That's amazing. But we don't need to talk about that now. So Trump is the president of the United States of America. There you go, yo. Just last night, we had analyzed this pair. There was a double bottom, a breakout, higher, low, and it rallied up. And it looked very exciting on the 4 hour at the time. And so I dropped out of the jumped up from the 4 hour to the daily. And I said, the problem is there's no way in hell I would ever buy it at this price. And I said, it might be a weakness of my strategy that I'm slow to turn. I'm a trend trader, so I don't give up trends very easily. And so even though it was very bullish, we were in the sell zone yesterday. And I'm like, look, if I was looking at this daily chart, I would sell it. I'd rather the US dollar be weak, but look, I don't know the outcome of the election, and I'm not so arrogant to pretend that I do. But I do know how to trade, and I do know that chart, and that chart does say down. So I have to respect that. I said the number one goal is survival. So anyways, down, baby, down. Okay, down, baby, down. Yeah. Cool, right? So now you could throw some other things down here if you wanted to. You could do, what could I add? Bootcamp pivots. Add annual and just kind of see where we are. Okay. So last night, price rose to the annual central pivot point and then collapsed. Does anybody think that that's random? Annual central pivot point. No answer. Is anyone right? Then what is your answer? What are your thoughts? Yeah, not random. Yeah. So we're right here at this moment, and I want you to recognize that that is a danger zone. U.S. dollar hits 4-month high in one session with Trump winning and red sweep in reach. Thank you, me. So pretty interesting stuff, right? Yeah. Ba 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 ba. How about like little things like this, like the move last night on the Aussie dollar?
Gold price analysis. Today, U.S. elections raises upside risks. Rose 6th November 2024.
Okay, look at that. Pivot to pivot. We call that a full Monty. And we're right back to the middle. That's some volatility, huh? So your question now, if you were you, would you, look, I already have the line drawn and everything. Like, I've already done all of this, but maybe you forget. Okay. Are you going to do that? What are you going to do? Okay, one of the things you probably want to do is go to your indicators, get your bias pivots, turn it to bear, little bearsy, huh? And you'll see that that is, okay, next week's, or is it next week's or tomorrow? I guess it's tomorrow. We're already at the sell zone. So what do you think? Are you going to do it? Does that look good to you? Okay, now if you're looking at the 4-hour, you already missed the opportunity to sell, okay, at the moving averages, okay, at a 618. So if you were trading last night and you were, well, trading the dollar strength, you missed it, bro. Like, I don't know what you were looking for. Very often what happens is, retail traders get stuck on the 15-minute chart and the hourly chart, and you just miss the big picture. You have all, you're very good at tactics, but your strategy might suck. That's a clear trade. That's as clear as it gets. Sell at the moving average, sell it at 618. U.S. dollar, Canadian dollar returns above 1.3900 as U.S. dollar strengthens across the board. And trade in the direction of the responsive move, right? Yeah. So, like, I wouldn't buy a dip under any circumstance, right? Yeah. Aussie's just getting crushed. Yeah. So that was a heck of an opportunity, man. Heck of an opportunity. Okay. And there's that negative vol. So one of the things I taught a lot at traders.com in our performance coaching sessions is that you don't actually need election night. You don't need election night. It's not that big of a deal. What you want to do is be ready the next day. And you can see you could have been 8 hours after the election and got 61% of the move, 62% of the move. That's not bad. To sleep in and get up early instead, right? Or I mean, go to bed early and get up early. Skip the middle. Now I did a watch party. It was nice to do that. We spent 2 hours watching, mostly on CNBC. For some reason, and I guess a lot of people were on the internet trying to watch all this stuff, but I couldn't get the streams. They were kind of laggy and choppy. Some of the, I went to Australia and they weren't even rolling their stream. But we watched news outlets and we watched Al Jazeera. I couldn't get whatever it was in Australia working. I don't think ABC worked. We watched a little bit of Bloomberg, but it was choppy. We watched CBC out of Canada. We ended up watching CNBC the most. CNN didn't load. I think we had Fox a little bit, but I don't think it was good. So anyway, luckily I was able to lean on CNBC, and we ended up watching that one the most. But that's a cool way, to get your news, in my humble opinion, to be able to just very easily go around the world and see what everybody else thinks and stay away from Fox and CNBC because they're so gosh darn biased, right? And the last thing you want to do, I think, is let's say you're a crazy Republican. I don't think you want to watch Fox. I think that's not informative. You've already made your decision, so you should watch all the crazy liberals on CNN and be informed on their ridiculousness, and vice versa. Radical liberal leftist, you should be watching Fox to see what those nutcases are up to. See, I'm insulting everybody equally. See? Right? Equality at the Wayne Show. Right? Insult everybody equally. So anyway, Elon is richer today and Trump is richer today. God bless America and capitalism, huh? Two people that needed it the most. Yep. So I have to bug my friend. I have a friend that is liberal. But his biggest investment of his net worth is into Tesla stock, which of course I wouldn't recommend having any big position in anything. And so he's going to wake up this morning, or he's already woken up this morning and found out, he lost the election, but he's significantly richer today because Tesla stock is up like 15%. And he's got like a huge percentage of his net worth loaded the boat on that thing. So you're like,
gold prices slump as dollar surges on Trump election victory.
So like, cheer up, dude. You're rich. So anyways, good for him, I suppose. So there we are on that. And remember, our sentiment score is very bearish on Aussie dollar. So, now you have a new sentiment score. So in our news service, okay, I'm going to add it here. So you'll have the news radar, the scalping radar.
Wall Street to surge on Trump's return. Eurozone private sector stagnates in October.
The implied volatility radar, and then the news sentiment radar. So you're going to have patterns inside the volatility of news. You're going to have implied volatility based on not sentiment or just normality, really. It's sort of like medium seasonality. It's like hourly seasonality. So I guess I'll squeeze it in here where the news to use is here for patterns inside the vol, but then we will actually read those news, right? And I love this implied volatility tool as well. I mean, oh my God, right? Like, it's so pretty. Oh, it's so pretty. Gold, right? Gold dang, that DJ made my day. Like the butcher, the baker, the candlestick maker. He's the maker, the breaker, and the heartbreaker. So you're like, just like, love it. Love it, love it, love it, love it, love it. Okay. You're like, but Wayne, where do you put your stop? How about like right there? That's statistically created. So based on Aussie Swiss franc going back weeks, this not just this time of day, but in general. So on Wednesdays, Aussie Swissy is not likely, statistically calculated, not likely to go lower than that, even if it's down. Now it's made a higher high, so you kind of want it to go down. And you want to buy a dip, and you want to buy a dip at a roll reversal. But no matter what happens, whether it's this hour, 4 hours, 8 hours, 12 hours from now, based on what Aussie Swiss franc does on Wednesdays going back months and months and months and months, you probably won't get stopped out at 57.11. Okay. Oh, Mr. Wayne, Trump winning today caused dollar strength. Yeah. Is it because of uncertainty? Nope. Or is it dollar safe haven? Not really. So tell me about Trump's policy on trade, on global trade. You tell me. President Trump's policy on global trade. What's his position? What is he likely to do? What's the likely outcome of a Trump victory when it comes to global trade? See, we only care about global trade as currency traders. If you're a Forex trader, money has to cross borders. So when global trade, like when you talk about GDP, okay, and I'll try not to get sucked into a speech. I have my big speech tomorrow, right? So my brain is just loaded with data. But anyways, GDP equals C plus I plus G, right? So how does this formula impact Forex? It doesn't. This is called a closed economy. But if you add imports and exports, so exports minus imports, then this is AKA foreign exchange. This is what we care about as international financiers. This we don't really care about so much when it comes to the change in valuation. Now this does matter on the longer run, but on the shorter run, exports minus, right? See, when we export, US dollar goes up. because we demand dollars for our wheat. So foreigners are going to have to buy dollars, and we sell them wheat. Or sorghum, sorry, to my sorghum buddies. Okay, we sell them sorghum, they have to buy a dollar and give us the dollar. But, you know, we buy laptops, and so X equals dollar up, M equals USD down. And it's just a math equation. Okay. So to answer the question, since I didn't get a response, Trump is likely to add a tariff. I know I didn't spell that right? Tariff. Did I spell that right?
Euro pound price. Forecast falls back down to floor of range.
Okay. Equals US dollar up. The reason for it is, okay, it's inflationary. If you can't import cheap solar panels from China, then you're not really serious about your green agenda, because you could get them cheaper, but you'd rather not. So you push up prices of solar panels in the United States. You're like, oh, I want a clean environment, but I don't want to pay China. So the trade policy with China is more important than the environment. That's what the United States says. So they say they're pro-green energy, but they're not. Okay? They're pro-electric vehicles, but you don't want to import electric vehicles from China, so you have to pay $100,000 for a Tesla. Well, you could pay $25,000 for a BYD. Pretty young thing. So that means for America, in this case of solar panels, will you pay more? Now, that's inflationary. Therefore, Fed cuts less because prices on the short run are going to remain higher. So the Fed cuts less. That's also USD up. Okay? So based on the likely policy next year and the likely response of the Fed to the new policy, dollar strong. Is it because of uncertainty? No, I think there's a 95% chance that Trump actually won. I think there's only a 5% chance where all of a sudden, wait, no, Pennsylvania and Michigan, and they all flip the other way. I don't think that's likely anymore. So, no, it's not because of uncertainty, it's because of certainty. And like I said, today is all about positioning based on the likely policy of the winning candidate. Okay, so why USD yen up? Well, we covered the dollar. Okay, so who's going to get big tariffs from Trump? We already have the tariff trade here, so we already understand this. But which country is going to get likely the biggest tariff right off the bat, without even discussion? Who's going to get hit the hardest with a Trump tariff? Anybody want to guess? JP says China. Anybody else? El Salvador? The Congo? Nothing could go wrong. I'm in the Congo. You think Trump is going to tariff?
A light U.S. economic calendar gives the market a chance to digest it all.
Ben, you think he's going to tariff his buddy Putin? So the answer I'm looking for is China. All right. When we analyze the yen and they export to the world, so there's your X.
What Trump's election means for Europe and the Netherlands.
Who is
ABN AMRO.
Wayne? Shh. Sometimes I'm very rude. All right. So when it comes to Japan, who's their number one competition? Remember, they're in the business of exporting products to the world. They make cars, they make computers, they make TVs, they make everything, right? Okay, great. Who's their biggest competitor when it comes to exporting? Oh, People's Republic of China. Oh, so if Tariff Boy comes in and tariffs the heck out of China, do you think that'll benefit Japan or hurt Japan? If suddenly there are 60% tariffs on Chinese products, will that benefit Japan or hurt Japan? Okay, and when Japan is in a good position and feeling good and is risk on, does the Japanese yen strengthen or weaken? When things are good in Japan, what happens to their currency? I will remind you that I consider yen a de facto reserve currency. So you have to think about how that impacts reserve currencies. My reserve currencies are yen for Asia, Swiss franc for Europe, and dollar for everybody. And they all have the same kind of response to risk on. It weakens. So logically speaking, you would expect USD yen to be up. Okay, and up, but only to the point where it precisely, without even a pip to spare, hits the M4 and stops. You're welcome, y'all. You're like, thank you, Wayne, for teaching me pivot points. Oh, you're very welcome. And so anyways, that's how the world works. Can I get a booyah for that? Come on, can I get a booyah? Give me a booyah. I need some confidence. I'm flying to the Fed today to stand in front of hundreds and hundreds and hundreds and hundreds and hundreds of PhDs of economics, and I'm going to teach them. So give me some strength, brother. Brothers and sisters, pump up the volume. Give me some love. Come on, booyah. Dude, who's got the gall to do that? No, Prince, they actually want that. They actually want that. And by the way, they don't always. Once every 8 to 10 years, they intervene. Yeah. Yeah, I might be able to give it. It's like the reason. Well, first of all, they don't publicize it. The Fed. I think they're very private. Like, dude, I got to go through security and. Ah, man, it's cool, man. I love going to work where you have to go through security and all that kind of stuff. But it's more of a workshop lecture than, I can't teach these guys anything. Do you understand? They have PhDs. They've been teaching economics for 30 years. I will be the dumbest economist in the room. Okay? There's no doubt. They've been teaching probably since I was born. they're tenured professors. So they know the textbooks inside and out, right? Okay, great. But do they trade the markets every day? No. I don't think any of these guys drive yellow Lambos, right? But there's no doubt they know their shit. And they know it better than me. Like, they could give me an exam and I'm like, please, at least a B, please, right? And, having gone to Harvard, some of my professors were good, but in my advanced macroeconomics class, my professor was a senior economist at the Boston Fed, and this guy, holy schnicker-schnocker, did he had a brutally difficult class. I'm telling you, it's brutal. And I think probably 20% of the room is like that, where they're probably just brutally tough professors. So I can't go in and give a typical lecture like you're like, I wish you could, you say you wish you could see my lecture. But it's not me teaching economics, because I can't teach them anything. I'm the dumbest guy in the room, right? I mean, the other people in the room are people that are economists at the St. Louis Fed. Like, dude, I am the weakest link. But maybe I can bring in a different perspective. And that's really what I'm doing. So I come in and I make it very clear. The whole objective of my presentation is I want to motivate young people that might be taking their class because it's required. They don't want to take an economics class, a freshman at university. They don't want to take an econ class, especially if you're getting a degree in underwater basket weaving or some nonsense that most people spend $200,000 on. They're required to take this stupid econ class. So they walk in, they're like, I hate econ, I hate math. I don't want to take this class, but I need to pass it, right? And so the professors come in, they're like, hey, let's talk about GDP equals C plus I plus G plus X minus M, and we got supply and demand equilibrium, and let's talk about the solo growth model and your rates of depreciation so you can get to a steady state. And you're like, okay, so these kids, they learn it, they get their A, and they move on. And they never think about economics again. What my presentation is about, and again, it's more of a workshop lecture, is like, look, hey, professors, maybe, right, early in your semester, maybe, and hopefully even the very, very, very first class, lecture number 1, we focus on making a human connection between our students, the data, and social impact of what economics is all about. How does economics, like, think of it, the rest of the entire class is about economics, but how does that impact social policy? And how does that social policy positively or negatively impact your community? Let's make the human connection. Lecture 1. And then I go over 4 resources. And then I rate how good they are for classroom, like as far as classroom resources of connecting happiness to GDP. And I show different models, 4 different models of measuring beyond GDP, to include things like social well-being, the environment, trustworthiness of your institutions, that kind of stuff, right? And then I kind of rank them like, this is great, this one's well known, it's done by the United Nations, but it's not really a good classroom resource, right? And so on and so forth. And I go through these models. And then at the very end, I propose a classroom project that the professors can do with their students in regards of managing their priorities for their economies. And then they can see what economies are similar to what they would prioritize as their economy. So if you would prioritize income equality and the environment, and you're willing to sacrifice some income, oh, well, I can show you which countries are like that. Okay? And here's the bottom line, by the way. Because the general idea of GDP is it's a terrible measure, and it doesn't measure anything about social well-being or happiness. I'm like, it's not supposed to, dummy. It measures productivity. But then people are like, yeah, well, productivity doesn't measure everything. No, it doesn't. And productivity doesn't mean that you're going to be happy, because look at all the rich countries. They're not really happy. Did you know that that's not true? I can show you quantitatively. There's over 12 years of analytical data on this now. Do you know who's not happy? If I did a survey of the World Misery Report, do you know who's miserable? People that wake up or are born in adjunct poverty. Your government is untrustworthy. Your police are untrustworthy. Your business, you start a small business to try to make your family better off, and then criminals come up and extort you. Your child gets sick. There's no hospital. Your kid's going to die, and you're going to watch it happen, and there's nothing you can frickin' do about it. But you don't have the stress of a commute, because you don't have a real job and you're struggling just to put food on the table. Oh, but you're happy. Bullshit. Okay? And that is not true. Now, the happiest countries in the world that have been very happy for a very long time don't feel happy, but they're happy. And so my research tells us that if you have very little to complain about, that is actually what happiness is. See, happiness is kind of fake. Maybe you're happy on your wedding or your honeymoon. You're happy on the day your child is born. But I think we need a different word for that. I think it's really a limitation of the English language. The French would probably have 150 words for happy. But it turns out happiness, in the general sense, is having nothing to complain about. So if you live in a country where you have a lot to complain about, you're generally not happy. You don't sleep well at night. You don't live very long. Your diet sucks, your healthcare sucks, your education sucks, right? It's nothing to feel very happy about. But the happiest countries, they don't feel that happy, but they're doing good. And there is a connection. The countries with trustworthy institutions, trustworthy society, good education, good health care, good jobs, a decent income. You don't need a lot of money for this, but you might have income minus high taxes to pay for some of this stuff. But the countries where your education is free and you can choose to do whatever you want to do with the rest of your life as far as a career. And health care. If you're sick, you're okay. It's taken care of. Countries that have these things are happier. But there's another piece, and it's trust in your institutions and trust into your fellow citizenry. The happiest country in the world is Finland. And so one of the tests in this economic study that has been going on for decades, right, over 10 years, they'll go out and they'll put money into wallets, like 10 or 20 wallets, and they'll just drop them on the street. every single one of those wallets with money in them, every single one, 100% of them in Finland were returned. You can trust your neighbor and a stranger. You can trust people on the street in Finland. And it's inherent. You just inherently trust people. You inherently treat people with dignity and respect, and it is returned. You never feel threatened. You don't feel discriminated. It doesn't make you happy, but it doesn't make you sad or angry.
Control of the house.
And so it's a very interesting thing. One thing that's unique about America versus the rest of the world, one part is it's less happy than it used to be. And when people are born, they're less happy than they used to be. Not by much, but it's definitely there. But you know what's unique about America is that you're born fairly happy. By the time you hit your 30s and 40s, you are less happy. You were happy as a kid. Everything's great. You got toys and everything. You got a bike and you don't have to work in a factory. So American kids are pretty happy. And then they turn 30 and 40 and they're less happy. And they're like, this is bullshit. Working 12 hours a day at your dead-end job just to pay for, your mortgage and your health insurance and you're saving for college. And you're like, life is less happy. But you know what's really unique, and it's the only place in the world, you become more happy as a retired person. You get happier again. Probably because that stress has gone away of your commute and your work and your work-life balance improves, and of course, so it's very unique. In a lot of places like Eastern Europe, you're not born very happy, although you're better off now than you were 10 years ago. But the older you get, the less happy you are. In sub-Saharan Africa, guess what? When you're born, you're not happy. You're very unhappy. And by the time you die, it's worse. Now, but it's so unhappy on the scale of the whole entire world that you're born miserable, and it gets a little bit worse because it can't get much worse. And this is actually by surveying people in Africa, asking Africans, how do you feel? So it's really interesting data when you start breaking things down by age and by country and all this kind of stuff. And so, this is a workshop, not a speech. So I basically just gave you the speech. Now, I have all these beautiful charts and slides, and I have these animations and access to databases and stuff. But that's it in a nutshell. That there's this misconception that money doesn't buy you happiness. And I'm not going to give this speech because, they're college professors. They'll kill me if I say money does buy happiness. But I don't know if it's money per se, because you can look at the highest income countries and some of them are not that happy. But there's something about dignity and doing work that you are proud of. You do work that makes a difference. And one of the most important key leading factors is not income. It's not income equality or other types of equality. It's not the environment. It's education. If you educate your citizenry, and I've done this before, the factors of production, right, is capital plus labor. Okay. But if you go in and use artificial intelligence to run your factory, you have capital to the alpha. But if you have entrepreneurial
Mexico's peso slumps to
labor,
2-year low on Trump win.
Oil falls as Trump victory pushes dollar higher.
Okay. Or you have a highly educated workforce that they're all college educated. That's labor to the alpha. And if you're labor to the alpha, you probably have better capital. And guess what happens to productivity? You have a more educated workforce, GDP goes up. And if GDP goes up and you have an educated workforce, okay, your happiness, you're happier. And you're like, I don't feel happy. Yeah, but you have less to worry about. If you're sick, if your kid gets sick tonight, you give them some medicine. If they get really sick, you take them to the hospital. In other countries, your kid dies. So you better be frickin' happy. Cheer up, bro. It's not so bad. It's not so bad. Oh, I should end it that way. Wouldn't it be like that? And drop the mic. Just drop the mic. Okay? Now, some of you guys live in Africa, and I don't know if I just hit you hard and you're like, oh my God, you're mad at me or something. I'm talking about the quantitative analysis of data gathered over 10 years by 4 different organizations, one governmental, one nonprofit, one for-profit, and I guess the other is sort of institutional. So 4 different constituencies have data going back, whatever. So if the data is biased or misleading or incorrect, I don't know. I didn't gather the data. But if I insulted anybody and you're like, how dare you talk about sub-Saharan Africa like that? I'm just looking at the data. Yeah. And that's my interpretation of the data. But it's quite clear. Right? Canada, the United States, and Western Europe have a lot less to worry about than sub-Saharan Africa. If you want to think about it that way, then you should, all right? I'm a foreigner, Chris. Crisscross make you want to jump, jump. Mickety Mac Daddy make you want to jump, jump. Yeah, I'm not Americano. I'm Canadian. Yeah.
U.S. dollar, a Republican clean sweep to fuel dollar strength. Higher yields, MUFG.
Crude oil dips as Trump secures win in presidential election.
I mean, can you guys hear this news desk behind me? It's good, right? How many people think that this is good, that I wasted, if you want, I invested many thousands of dollars building this. How many people think this is a good product? Yeah, this is TRADARS. You just heard me read the news to you while I was talking. How did I do that? Yeah, it's AI. A lot of this is on AWS, but the talent, if you will, the voices, AWS couldn't do it. So they have some voice AI software, and we tried it and tested it, and it's just not good. And if there's probably 100 other services that offer free or cheap voices, and they're terrible. So I've paid very, very good money to use the most advanced voices in the world, the highest, best, most expensive technology. And some of it's comical, like it doesn't know NZ means New Zealand. But I'd say 90% of the time, it's really good. And we can train it to understand that NZ is New Zealand. So it'll get better and better. But, oh my God, I try to, I use a Squawk service for, over a decade, but I used one more recently that cost $400 a month. And so I hope you guys end up using this. Maybe next week I'm going to launch it. And I'm making it free. So don't let me down. I don't want to, right? I don't want to feel like I did all of this for nothing. Chris, Bloomberg Terminal is $2,000 a month. And when you look at TRADARS, I consider traders.com the Bloomberg terminal for retail traders. And so there's fundamentals, there's technicals, there's scalping, like all these other tools. But there's a 24-hour news desk. Okay. Yeah, well, Forex Boson, is it Boson? Yeah, I mean, we already have all that stuff, right? Like, better than that. Like, first of all, that's a simple relative strength exercise. That should take you 1 minute. Most new retail Forex traders, what they do is they use some tool that they put on their trading platform, and it tells them strong versus weak, but it doesn't tell you why. And so they're like, oh, it's up. And they're like, why? I don't know. Is it using moving averages? Is it using oscillators? Is it looking at multiple time frames? I don't know. It just says up. So that's not the right way of doing this. Okay, you need to actually do the work, in my humble opinion. But, for example, if we answer that question, Boson, instead of which one happens to be strong or weak, we call that a relative strength exercise. Literally, that should take you even 20 seconds to do it yourself. And I'll show you if you want. Okay? But nonetheless, if you break this down by risk on and risk off, Traders.com already shows you based on the short-term move of what's happening in the market right now. And again, we look at the entire options market, volatility, gold, yen, 2-year treasuries, S&P 500, so the broad stock market, the US dollar, 10-year yields, not just 2-year yields, 10-year yields. We break all this down and we quantify it and analyze it. And in this case, okay, Boson, you probably want to look at buying Aussie, Euro, CAD, Kiwi, gold, S&P 500, and you want to sell Swissy, yen, and dollar. Now you're like, but wait, dollar is strong. Okay, then don't do it. Because this is looking at normal correlations. But we have something unique going on because of the Trump victory and his likely future policy. So you can look at it and you're like, no, I don't want to sell US dollar. Then don't. But what about these yens, right? And you should go look at that. Yeah, no, I agree with them, Chris. They can't predict the stock market or the Forex market. That's true. They cannot. So they're correct. Okay. Yep, they're right. I mean, why argue with them, Chris? They're not going to listen. They're going to, if they think you're a degenerate gambler, and then in their mind, it makes logical sense that there's no way you can understand all this gobbledygoo. So, yeah, it's unpredictable. Good. They're right. They can't predict it. And there's nothing that you're going to be able to say to change their mind. Okay? Now, one of the things that I use to predict the future is seasonality. And so, oh, look, from this period, it goes down, 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 down. Yep. Yeah, so we use a lot of things that are predictable. through seasonality. So I'm just grabbing random things as I talk. But let me. How about this, Chris? Okay. How many people here saw my 2-hour presentation in January, 11 months ago? And I said, normally October is a massive dollar weakness move, but this year, dollar will not be weak, dollar will be strong. How many people, without a shadow of a doubt, attended that 2-hour presentation 11 months ago, and you clearly heard me articulate with facts that this year is going to be different. US dollar is going to be ripper strong. Two people were there. Anybody else? 3 people. Anybody else? Four people. Anybody else? 5 people. Anybody else? 6 people. Can we get to 10? Anybody? Just 6? Anybody else? No? 7? 8? 2 more? 9? Anybody else? The one in January. Okay? Okay, now we're at 11. Okay, great. All right, so it clearly happened. Okay, it clearly happened. So, my counter argument, Chris, is that those people are correct. They cannot do it. And I think it's very difficult, having spoken to people with that same opinion. They've been so trained that way. Like every single money manager in America that manages your retirement account, they'll tell you that you can't predict the future. So the only way you can save your soul is through diversification. Of course, that's bullshit. A, you can predict it. And B, if you diversify, you're guaranteed not to get rich. So anyways, whatever, they still take 1% of your net worth. And they've been trained to tell you, and they actually believe it, that you can't predict the future. Well, that's because they have a sports marketing degree. They're not economists. They don't have a finance degree. They fell into this because they flunked as an accountant or something. And they're like, well, I guess I'll be a money manager. And now they manage your money. Whatever. Okay? But if you talk to a Wall Street trader at Goldman Sachs or any of the big firms, dude, their whole job is predicting the future. But that's a whole different thing, right? So my point is, that's true. People 100% believe the market's unpredictable, and you won't be able to convince them otherwise. I'm just here to show you that the market is volatile. It is
price.
Complex.
Prediction. Price flirts with lower boundary line of rising wedge pattern.
But there are conservative, repeatable patterns inside the chaos. Okay. Yeah, Chris, that's typical, especially Edward Jones. Okay. Whatever. Yeah. I mean, it's a crime almost, right? I mean, the dog won't eat the dog food. Okay. So anyways, there is another level. I'm not trying to tell you it's easy and that other people are dumb. What I'm saying is they don't have enough knowledge to be able to do it. So they're 100% correct. And they're especially those that get into money or law or, accounting. When you're a service provider like that, you develop a level of confidence that can lead to arrogance. And they're like,
I've been working at Edward Jones for over 30 years. I have $100 million under management, and I know you can't predict the future. I'm like, okay, that's cool. I mean, you're not going to be able to convince that guy. He's 100% convinced, and he's 100% right, but there's some ego attached to it. And you're not. And if he agreed with you, now he has to shatter his own ego, and you know that doesn't happen. So it's impossible, right? But if you step back with a little bit of humility and a heck of a lot of education and time and experience, there's logic behind money. I look at money as Newtonian physics, like it's a giant clock. So, Trump, he's going to win. He's going to raise tariffs. It's going to benefit Japan. It's going to increase inflation. It's going to change the policy at the Fed. That'll create dollar strength.
Stocks.
Like, it's all logical.
Early rally as Trump reclaims White House.
And the Edward Jones guy, he can't do that. He just can't. Okay? So the cool thing, guys, is I preach to teach. I taught myself technical and fundamental analysis. I learned most of my fundamentals when studying for my Series 3 examination. And then I just studied it like crazy. Just like technicals, I just threw myself in. I'm not a balanced person. I'm a nutcase. I obsess. So like a bulldog, I just grabbed onto technical analysis and I mastered it through ridiculous, sickening work ethic. And ultimately, I ended up doing that with fundamentals. But then I'm like, you know what? I'm going to go to Harvard for 5 frickin' years and study this and see if I can learn more. So there was nothing that I was unwilling to do. There was no limit to how much money I was willing to invest. I am willing to do anything to improve as a trader and as an investor. There is no limit. And so I do that. And now I work for you. I work for you. You hire me. Right? Traders.com. You need, if you're going to be in a situation where you can make informed, fundamental, and technical decisions,
New era.
you need to automate because you're a single solo trader, but you want to trade like you're a small institutional player. That you have a technical analysis staff, that you have at least one quant or one economist on your team to go through all the fundamentals, right? Your technical analyst shows you trading opportunities every morning. You go to your desk and you're like, hey, look at this, boss. Hey, look at that, boss. Meanwhile, don't look at the other 7,420 things, right? Which is very beneficial. And then it helps you identify opportunities. It helps you identify threats. You have hours and hours and hours a day of performance coaching. Like you have an opportunity now to stop being an amateur. Right here, right now, you make a choice. Okay? And if you want stuff like real-time news feeds and real-time technical setups, real-time calendars, real-time market sentiment. Think about it now. I'm about to launch a tool that reads hundreds of news reports on your behalf. So a lot of you guys ask me like, well, so how do you get to know all these fundamentals? What do you do? What do you do? What do you do? Well, now I've automated that for you. You're like, Wayne, I have a full-time job. I only trade a few hours a day. How do I keep up with all the news? And how do I figure out what's, good and what's bad? Like, I just automated that for you where I have now machines read articles for you. In some cases, like over a dozen news sources. analyzes it for you, and just pops out a score. Yeah, it's modestly bullish. Oh. These tools, right, like the implied volatility tool, these tools are insane. Chris, TRADARS is $1 million for lifetime access. Yeah. So anyways, we have 54 minutes to the next news event. If it comes out less than expected, you got a euro-dollar trade, but probably in the wrong direction because of what's actually happening now in the market. So anyways, just be prepared that that's coming up. Okay? You see it here in 53 minutes. You will get this in real time. And in theory, there's an upgrade that's supposed to occur in 53 minutes. So I hope that works. But you can get the news here in real time. And we had news recently, and as soon as the news came out, a whole trickle of news came in, and all of a sudden,
Lagarde wants bigger banks?
The news desk was reading it to you. So pretty cool, right? Oh, Chris is asking all the tough questions. Where do I go to learn fundamentals? Oh, it's included. Would you like to know about macroeconomic principles? Okay. It's only 16 hours long, Chris. Would you like to learn about central banking? This one also is about 16 hours. So that's about 32 hours. Yeah, you have about 32 hours, more or less, just on that alone. Just those two courses. These courses on the left add up to about 100 hours. This macroeconomic class is based on a lot of the stuff I learned at Harvard.
And then we're going to depreciate it at a fixed rate, like 2%. And we're going to reinvest our profits, right? Our productivity. We're going to take 30% of that and reinvest it into the future. Okay. But now we're throwing in this idea of A. So really what we were saying here is Y is equal to 100% of your ability to be productive. So your idea now, you can come in and say, well, what if you had better ideas, like Henry Ford coming in and say, you know what, if we do it a different way, if we build cars a different way, I can double productivity from 100% of the square root of K to 200% of the square root of K. Not because of more capital, not because of more labor, but the combination of the two was done in a different way, that entrepreneurial idea, to increase productivity. Now, check this out. This is the power of entrepreneurialism. So we got to this point, okay? Well, let's go back here. We got to this point here, right? Can you see my mouse, by the way? Yeah, you can see that? All right, so we got to the steady state. Do you remember what the steady state is? It's where your investment equals depreciation. Now, I gave you an example, like you can cheat this, and we're gonna think about this down the road when we talk about business cycles. But what if you kind of cheat and you say, I'm not going to spend money on depreciation. So again, imagine you...
Dude, you see how good this is?
And you get...
Like, that is a legit lecture. That's legit. There's no gurus on YouTube that can do that. There's just no way. So Chris says, like, why are fundamentals more important than technicals? Fundamentals created all these trends. Technicals only tell you decent prices and decent times to buy or sell. Okay? So, like, why did this go up? That's a fundamental question. Why did it stop here? That's a technical question. Okay? Because technical analysis is price and time. But it doesn't tell you why. And if I can predict the future 11 months in advance, maybe there's a little bit of something to, in what I teach. At the very least, there must be some logic. And if you have the logic, if you can gather the intelligence to formulate your strategies in advance, your tactical actions probably have greater effect. And ultimately, I just want you to be a well-rounded, holistic trader. My way isn't the right way. That's not what I'm teaching. None of what I teach you is about me. I don't give two hoots about these moving averages. You can change them. They will be fine. Things like that. You can adjust your oscillators. You can use different oscillators. You can do all kinds of things. It doesn't matter. What matters is you know how to trade. So with strong fundamentals, you develop the right strategy that could last weeks, if not months. And then your technicals help you identify good price action. Part of price action is using pivot points. They're a leading indicator to tell you where people are likely to take profit. The fact it went from M1 to M4 is not random. So if you don't know this, you don't know jack. You don't know how to trade. Like that might be your problem. Some guru taught you how to trade poorly. All right, well, you got to fix that. But once you get technical analysis down, that's the easy part. Okay, the next the next challenge for you is to learn fundamentals, but I'll leave you with this thought. I know lots and lots and lots and lots and lots and lots of professional traders, institutional professional traders. And when we get together, we never talk about the charts. I mean, I should say almost never. When we do talk, we'll say things like, "Oh man, did you see the monthly M4 on that USD yen? Oh man, yeah, I did a full Monty." And that's that. Okay? But that's partially because I taught several of those professional traders how to trade. Now they're professional traders, so they're talking, they're talking the Wayne. But everybody else, right? All the other institutional investors, we never talk about a chart at all. It's only macroeconomics. It's only fundamentals. What do you think the market's going to do next year? Oh, I have a plan for that. And then, of course, I can write a thesis and I can do a PowerPoint presentation. I can do all that and back it up. And therefore, there's a strategy. And potential investors could understand whether that fits into their portfolio, because everyone's portfolio is slightly different and everybody has different opportunities and threats. And they're like, oh, I might need a Forex guy to do something for me that would make my overall portfolio perform better or less volatile, or provide diversification or non-correlation. And they're like, I need this Forex guy. So then they come to me and they're like, hey, Wayne, what's going to happen next year? And you're like, I don't know. I just trade MACD crossovers. I have no freaking clue what's going to happen next year. I don't understand anything about fundamentals. Economics, the Fed, that's bullshit. And your customer just walks away. Your client just walks away. Okay. So anyways, I got to go. I'm not going to be around for a few days. I am going to St. Louis. Tomorrow I am speaking during the Fed announcement. So tomorrow on Thursday, the Fed's going to announce their interest rate decision. And I'm going to be in the hallowed halls of the St. Louis Federal Reserve Bank. But not only that, I won't just be wandering the halls or sitting in a lecture chair. I will be on stage teaching. Holy shit! And the alarms are going to go off. Ding, 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 ding. Fed cuts, Fed cuts, Fed cuts. Boop, 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 boop. And I'll be on stage dressed like a Harvard professor. Oh, it's going to be so funny. I'm going to have so much fun. Oh my God, it's going to be so much fun. I geek out on this stuff. Okay? Okay. Chris, I don't even know what that is. But anyways, so there you go. It's going to be an exciting week. I miss you already. We got through the first big event. The second one is the interest rate decision. So be careful out there. Be smart. Think long term. Start everything on the high time frame and work your way down into, tactics, right? Always start with strategy and then work your way into tactics. I hope you see the value of traders.com and what I've been building for you really over decades. And I hope you see that I'm reinvesting. There's more and there's more and there's more. It gets better and better and better. And I have some aces up my sleeve that will blow you away, that hopefully I can announce by the new year, or certainly, January. That'll just like completely game changer stuff. Or maybe it doesn't happen at all. I don't know. That's the problem with, forging a future. It's tough and it's complicated. But the bottom line is, I hope that you see that I'm on your team. I'm there with you every day. This is hard, but you're not alone. I hope you see that, I'm fighting for you, that I represent you, that, you're coming along with me at the Fed, that, we are a team. We are a partnership. We're friends. I hope you feel that way. I know I do. So peace on earth. May the pips be with you. May your profits be above average. And I'll probably see you Friday at FX Street, but, things are odd sometimes on the road. So if I don't see you then, I will see you here at Forex.Today on Monday. But wish me luck. It's a big day. It's a flex that I'm going to be able to keep the rest of my life. So it's one of those things that grow not just on your LinkedIn profile, but maybe even your gravestone, huh? I don't know any other professional investor or trader that has ever been invited to speak at a Fed. Not even one. So it's kind of cool, man. It's kind of cool. Oh, that's right. Monday's a holiday. I probably will need it. I'll probably need it. Yes, 11/11. I've actually stood on the spot during Armistice. In Canada, we call it Remembrance Day. So it's very, very important to me that day. So, I'm just distracted. So that's right. So I will see you Tuesday then. Okay? And thank you to those who have served. And please remember those that never made it home. And really, those that made it home but still have a war, not easy, but thanks. So peace on earth. May the pips be with you. May our profits be above average. And be careful. Okay? Be careful. There's a lot of volatility coming yet, so be careful.